Hey everyone, welcome back to Crypto Clarity, where we break down crypto news so you don't miss opportunities. Today we're talking about Bitcoin ETFs, those exchange-traded funds that allow big investors to buy Bitcoin without touching a wallet. Billions of dollars have been flowing in and out of these funds lately, and that movement is giving us some major clues about where Bitcoin's price could be headed next. ETF flows are basically money moving in or out of Bitcoin funds. When investors buy shares of a Bitcoin ETF, the fund has to go out and buy real Bitcoin to back those shares. That's called an inflow, and it adds buying pressure to the market. When investors sell ETF shares, the fund may need to sell Bitcoin. That's an outflow, which can create selling pressure. Think of ETF flows as a kind of pulse for institutional demand. When the pulse is strong and inflows are high, it often points to bullish sentiment. When the pulse weakens and outflows dominate, it's a warning sign that big money is taking profits or hedging risk. Over the past few weeks, we've seen a tug of war. Some days bring massive inflows, hundreds of millions of dollars moving into the biggest Bitcoin ETFs. Other days flip red with sharp outflows. Every time those inflow days stack up, Bitcoin's price tends to grind higher. When outflows lead, we see quick pullbacks or sideways movement. The key takeaway is that ETF flows aren't random. They often reflect how hedge funds, family offices, and long-term investors feel about macro events like interest rate changes, inflation data, or upcoming halving cycles. Here's why you should care, even if you're just stacking sats on an exchange. ETF flows show real demand from big players who move the market. Tracking them can give you early hints before retail sentiment catches up. For example, if you see 3 or 4 days of strong inflows while social media is still bearish, that could signal smart money is quietly buying the dip. On the other hand, if price is pumping but ETF flows are negative, it might mean the rally is running on fumes. The good news is you don't need a Bloomberg terminal. Sites like CoinGlass, Farside Investors, and even some free Twitter accounts post daily ETF flow numbers. Check the direction, not just the total. Consistent inflows over a week are more meaningful than a single big day. Bitcoin ETFs are still young, but they've already become a major driver of price action. Keep an eye on those inflows and outflows. It's like reading the heartbeat of institutional money. And remember, flows are a clue, not a guarantee. Always pair them with solid risk management and your own research. If you found this breakdown helpful, hit like, drop a comment, and subscribe to Crypto Clarity for more no-nonsense crypto updates. Thanks for watching, and stay sharp out there.